Good morning, everyone. It's Monday, May the 11th, and welcome to 7 Investing Live. This is our live stream event where we put a spotlight and showcase several of the stock market's most intriguing opportunities. You can follow along with us live every Monday, Wednesday, and Friday at 10 a.m. Eastern Time. My name is Simon Erickson. I'm founder of 7 Investing. I'm joined by our executive producer, Heather Horton. This morning, we are going to talk about the trade desk. One of those battleground stocks, one of those controversial stocks out there that's having a pretty difficult year. We did just get first quarter earnings. We're going to dig into that, see why the growth is slowing down a bit here recently, and then also talk about the company's long-term strategy and whether it does remain an intriguing long-term investment opportunity. A reminder that long-term investment opportunities is what we're always searching for at 7 Investing. You can see our entire scorecard of all of the recommendations we've ever made, as well as our 5 best buys each and every month. If you get started at 7investing.com/subscribe today, that gives you your first 7 days completely free. No strings attached. You can look at every single piece of content, every recommendation report, and every best buy we've ever written right there. 7investing.com/subscribe. I'd encourage you to check that out and see everything that we've got here this morning. Let's jump into the trade desk, though. The first thing you have to look at if you're punching in TTD into your browser is this has not been a good year for the trade desk stock. In fact, there you go. Over the last 12 months, down 67% in total return versus the S&P's 32%. You generally don't like to see a stock underperforming the broader market by 100 percentage points. This is a bit abnormal for the trade desk, who used to be one of the stock market's darlings. Was just an incredible performer for the past decade plus in the public markets. It was doing fantastically well. This is a demand side platform for programmatic advertising. And so what does that mean? Well, basically, every time you go to the internet, whatever site you're on, you're always seeing ad support on the side of an internet site. If you're in a podcast, you might be hearing ad support. If you're watching a connected TV station, you might see programmatic ads popping up that knows a little bit about who you are and what you might be likely to buy. The trade desk works directly with advertising clients to place those ads into the right place at the right time for the right person to see. This is specifically different than the walled gardens. In fact, if we look at the entire advertising industry, hopefully we've got a chart here that shows about the $1 trillion globally that is spent on advertising all over the world. This is a bunch of different formats. There's the great results from the trade desk. We've even got one that might show a little bit more about how that's split up. Thank you very much, Heather. Put you on the spot there. This is the one I was looking for. Look at kind of how traditional media is a smaller piece of this pie. $200 billion still being spent on traditional media sources. But the internet has been, advertising on the internet has gone more towards search. Of course, Google has made an empire out of that over the last 25 years. And social. Facebook has done the same thing. Both of those now $250 billion markets, which are even larger than traditional media spend. But then we've also got the open internet, where if you don't want to just advertise within Facebook's black box of the walled garden that it has, within the Google black box that it has in search, within Amazon, in Amazon Prime and the publishing that it has available, you can go out there and place ads anywhere else on the internet that doesn't have the biases or the price biases of those walled gardens. That's what the trade desk is truly trying to create, an open internet demand side platform. They can go anywhere out there. And this is truly the vision of Jeff Green of what he wants to do. I would like to address a few of the elephants in this room first, which is the slowing growth that the trade desk has had here in the most recent first quarter. We just got results last week that showed that revenue had slowed to 12% year over year, which is about half of the growth rate that it had in the previous first quarter of 2025. At that point, it was growing at 25% a year. Now it's only growing at 12%. And in fact, it guided for second quarter year over year growth of only 8% for top line revenue. A reminder that the trade desk is directly exposed to overall gross ad spend. It takes a cut of every advertisement that's placed out there, typically a take rate of about 20% as a blended average that falls to it as revenue, but it's all dependent on that gross ad spend. I'm not surprising anyone when I'm saying that this has been a difficult year for advertising. You've seen the forecast for global advertising decrease because of factors like tariffs that have been imposed on several nations out there. You've seen the price of gasoline and other energy costs going higher. So people are paying more at the pump They might be spending less on going out and buying things in discretionary nature. All of that factors into how much consumers are willing to spend and also how much advertisers are willing to spend for their ad budgets. It's been a constricted year, and that's been very difficult for a company like the Trade Desk, who is very dependent on that ad spend to flow through for its top line revenue. So yes, we can look at that. We can say, yes, we can blame the macro. We can say this is a difficult economy out there. Maybe that's why we're only seeing 12% growth this quarter and only expecting 8% in the forward quarter going forward. Certainly a company that's very exposed to the state of the economy globally out there. But there's another thing too that I think as long-term investors, we need to be paying a little bit more attention to. And that is that Amazon is now directly, in many ways, competing with the Trade Desk because it's launched its own demand-side platform as well. Amazon, as a reminder, typically like to place advertisements within its own inventory that it owns. Amazon Prime wants to place ads within Amazon Prime shows. It doesn't want to go out there and work with the open internet. It wants to do what's best for Amazon because then it captures all of that revenue that comes from the advertising. But Amazon more recently has decided to go out there and compete in the open internet a little bit more broadly, which in many ways is a little bit more in the backyard of where the Trade Desk was typically exclusively playing. And these two models are a little bit different. I think there's some nuance in this that is worth exploring as investors. So we can understand, yes, Amazon is in the game now, but it's not exactly the same thing that the Trade Desk is doing. First of all, let's look on the right-hand side of this chart. This is showing what the Trade Desk does, how it collects data from you, and then how it's actually using that to feed its advertising platform, right? This is third-party data. This is from websites that it's collecting information about who's visiting those websites, who's going to those podcasts, who's watching those connected TV stations. You can kind of see some of the data that's provided that it collects there in the middle and then uses these fine-tuned algorithms to place the right ads for the right people. One thing that's important to note here, though, is because of these identity graphs from the third-party data, this is probabilistic algorithms. This does not show, the Trade Desk doesn't have first-party data that it kind of knows these people are going to buy. It just thinks, based on all of the number crunching that it's done, all the algorithms that it runs, this is the most likely person to convert. This is the ad that we're going to show on your site. That's a little bit different than what Amazon is doing because Amazon has got first-party direct consumer shopping behavior. Amazon, one of the largest e-commerce sites in the entire world, it knows exactly what people are buying. And so it uses that first-party data of its own shoppers that have actually bought things on the Amazon site to feed its DSP to serve the right ad for the right person. This is what's called deterministic algorithms, a little bit different than probabilistic because it seems like there's a little bit closer of a connection between what Amazon knows people are going to buy from its own first-party data and the ads that it wants to show to the right people. There is a bit of a pause on this because a lot of retailers might not want to work with Amazon. Amazon might be competing against a lot of retailers in developing its own products, especially if it starts to see a lot of conversions. Amazon is, of course, going to be biased in the pricing that it's going to charge for ads that are placed within its own black box. If you're showing a video ad that's going to be displayed on Amazon Prime, Amazon might not be fully transparent about you getting the very, very best deal out there. And so one of the biggest debates out there is how important is it to have that first-party data with Amazon, which is really lucrative because it's directly tied to shopper behavior, but are you really willing to give up the independence of a company like the Trade Desk, knowing that the Trade Desk, completely independent, completely customizable, and not an open source, but an open platform for the open internet that's out there? It's kind of, these two models aren't exactly the same, but they both have their merits. I do think that generally, if I was going to bet on how this industry evolves, you're going to see both of these companies win. I think that ad agencies are going to evaluate each of them and look at their own merits and then make decisions depending on the return on ad spend that they demand. If a certain advertiser truly wants the independence because it doesn't want to compete against Amazon, maybe that's a great ad budget to send the Trade Desk's way. Versus if you're another company out there, consumer facing, you really like the data and the information and the conversion efficiency that you have with Amazon, maybe that's the one that you would go with the Amazon DSP. I think the wrong way to evaluate is to say this is just going to be the Trade Desk or just going to be the Amazon DSP that wins in this programmatic market. I think there is room for both of these companies to do very well, keeping in mind that we're dealing with a $1 trillion global market that's still continuing to expand. So I want to dig a little bit more into what is the trade desk doing going forward. There's been a lot of changes with this company, right? The trade desk has still got Jeff Green at the helm as the CEO, but it has had a revolving door, so to speak, over the last 2 to 3 years of its executive suite. We saw its CFO, Dave Pickles, step down a couple of years ago, still a consultant on the side for the company, but not directly involved in the day-to-day anymore. It's now got a new chief strategy officer. It's now got a chief financial officer. It's got a lot of the chief management ranks have changed, and they're coming from larger organizations. They're coming from the Googles and the Salesforces of the world, because the trade desk is trying to do new big things at scale. It's not just this small innovator that's based upon Jeff Green's vision of a more efficient ad buying process anymore. Now it wants to get some really big fish that it's going to fry out there and get them up to scale so it can get those margins that are very, very attractive. This is why you start seeing the trade desk launching some of its newest initiatives. We've now seen fully agentic AI applied to its Koa platform. This is AI before. You could kind of go in there if you were running a campaign, say that you're an advertising manager, you want to optimize your outcomes for conversions or traffic or visitors or certain demographics, whatever it was, you could kind of go in there and select the metrics that were important to you. The trade desk is now making that fully agentic, which means it's using AI to make all those decisions based on what you tell it that you want to optimize, and it runs the campaigns for you. That's going to be very interesting if you wanted to have a similar format as you did things before, just more AI tools that can help you make decisions better. But another thing that the trade desk is doing is it's now actually connecting the dots much more efficiently between the publishers that are showing those ads and the advertisers that want access to those ads as well. We've got one more chart, hopefully, here that's going to talk about the excesses of this industry. If you're going from on the left-hand side, the farthest upstream, the people that are placing those ads, thank you very much, Heather, and then all the way on the right-hand side to the, all the way, I've got it backwards, the advertisers placing the ads very, very far upstream, all the way to the publishers where those ads are actually showing up. Look at the numbers there. For every dollar that an advertiser is spending, a publisher is only capturing 55 cents, because the ad buying process and the auctions that we have, the real-time bidding auctions that we've got out there, have got so many middlemen in the middle there, right? You're losing 45% of every ad dollar spent due to the process that we've set up out there. And so this drives Jeff Green crazy. This drives the trade desk to do innovative new things where they're saying, wait, why do you want to lose the efficiency of this? Why do you want to spend so much money for these kind of ad servers and data platforms and network exchanges and running the auctions and all these other things? Do we really need all the metrics that a supply side platform is even providing out there? What if we could connect you, Mr. Advertiser on the right, through our DSP directly to the publishers that are showing content and skip a lot of those middle steps? Would it be worth it for you to give us another 5 to 10% if we're saving you 15 to 20 to 25% in costs? This is what OpenPath is exploring right now, which would be directly bypassing the real-time bidding process that the ad exchanges are using for programmatic today. It's one of those things that's driving the trade desk. They've already used it with the Washington Post. They've used it with other large publishers that are exploring this idea. And it could be something that, if it gets implemented at scale with the trade desk new leadership team, could completely change the programmatic ad industry as we know. In fact, could completely change the entire digital ad industry as we know it today. So it comes back to Jeff Green. This is a guy that has ruffled some feathers over the years, right? He hasn't always gone out there and disrupted this trillion-dollar market without rubbing a few people the wrong way. Sometimes there were debates about how he was charging for things. Sometimes there were debates about whether he was cutting out their own clients and the cut that they were getting in this process. The point is, this is a very, very large and very, very fragmented advertising market. And the trade desk is very, very intent on making it more efficient for the advertisers that are putting their dollars to work to make sure they're capturing as good of a return on ad spend as possible. You just got this new small competitor out there called Amazon, who instead of charging a 20% blended average take rate, is actually charging closer to 10 to 12% right now. I think most likely is we're going to see the trade desk reduce its pricing and reduce its take rates a little bit, keep its margins high as it goes fully automated for a lot of these AI campaigns. And this industry is going to recover within the next 2 years. And one more thing, because before I'd like to open it up, Heather, is I did a little bit of valuation work on this. Because before Amazon jumped in and started competing head to head with the trade desk here within the last year, I put a base case that the shares were worth $75 a piece, which would imply a higher growth rate than what we've seen in the last 2 quarters for the trade desk. Lots happened since then, in the 12 months probably since then. But I also think that today, with the shares trading right in the neighborhood of $21 or $22 a share, the market, investors today are really only pricing in about 10% top line growth for the trade desk through the year 2030. I think, in my opinion, that sounds very conservative. I think that actually it's going to be much more realistic, that we're going to see ad budgets bounce back maybe in 2027. I think that by 2028 and 2029, and then by the end of the decade, we're going to resume to seeing the trade desk at least to 15-17% top line growth, if not higher than that. So I think that the stock right now is pretty significantly undervalued. I think there's a very compelling case. You could say that by 2027, at the end of the year, the trade desk stock is worth $40 per share or more. I'm sharing a lot of those details in our community forum here with 7 Investing, exactly how I came up with those numbers, the inputs and the assumptions, and what this might look like going forward, and a full discounted cash flow for the trade desk. You can get full access to that at 7investing.com/subscribe, and then jump right into our community forum, which has got more than 1,400 members actively contributing into it. So that's the trade desk. I'm going to open it up at that point. Heather, I'd love to hear if you have any thoughts about this company, or opinions about advertising, or opinions about the strategy going forward. But it seems pretty compelling. I've been saying it all the way down that there's a lot to like in this business long term. Other than the stock price and the stock graph of that last 12 months, there's still a lot that's going on that's going well for this business.
Yeah, it's wild to see the stock so beaten down after it was so popular for so long. Um, the new agentic systems they're implementing, is that seeing a noticeable growth for clients in the success of campaigns, or is it just optimizing for the trade desk so that they can, okay, that
More for
makes
retention. They just launched, as within the last 2 months, I believe is when it was. It's kind of a new tool to say, hey, we're going to give you some time back. We're going to let the AI do its thing for you rather than you have to do any of that manually.
makes sense. We've got a comment about the trade desk should be sold to OpenAI. Is
Ooh,
OpenAI trying to buy the trade desk?
that would make it interesting, right? I mean, the valuation for a company like OpenAI that's now worth what $1 trillion in the private market, $600 billion, wherever we stand. What's a couple $100 billion for to go out there and buy a platform like this?
For sure. I do think that this is a really interesting long term buy because, yeah, it does seem very low. And I mean, even at the 12% growth that people are upset about, it's still doing better than the valuation would say. Um,
One thing to
with
note on that too is the difference between first party and third party data, right? So this is a great question, Fadi. Thank you for pointing out that the trade desk is very different from OpenAI. We used to see the cookie, the third party cookie was the way to track you across the internet, spy on you. Those advertisers who place you the right ad. We got tired of the cookie. It was kind of invasive and privacy concerns and all the stuff that we didn't like about that. The universal identifier that the trade desk created, which is another kind of similar to the cookie, but a much better, much more secure way of tracking, is still tracking behavior across the internet, across the open internet. It's still similar to what the cookie was in essence doing, versus OpenAI, which is more of first party data. You're directly interacting with GPT and asking its questions and giving your buying intent on things. Maybe you're asking about Saints gear, so it might know that I love the New Orleans Saints, and now it's going to start showing me advertisements on the Saints on the side. These are kind of different, in the type of data that you're getting. It might be perhaps a criticism that the trade desk needs to start collecting more first party data, and it could be a disadvantage of the third party. But I think in terms of third party, it's much better than the cookie.
Yeah. And are brands concerned about giving so much of their own? Do they have to give a lot of data to Amazon? That seems like it would be a bit of a concern to a lot of companies about having
Yeah.
to.
If you're an advertiser and you're trying to get people to buy your products, you're kind of showing Amazon your cards because it's the one that's sending the people to you, and then it's going to start saying, oh, this is really working well. maybe you might not want to do that. Walmart doesn't want to work with Amazon DSP. It wanted to develop its own because that's kind of a direct head-to-head e-commerce competitor for a company like that.
And are companies developing their own systems a big concern for Trade Desk? Because
That's what Walmart did. The Walmart did its own, its own platform to actually facilitate. Walmart.com is now actually a big focus for this. Walmart is not just bricks and mortar stores anymore. Its e-commerce division is kicking butt and taking names out there. It's kind of evaluating a lot of different things. It was working with the Trade Desk to kind of power the back end of this. A lot of the IP and the technology, was in a licensing agreement with Walmart. And now Walmart's going out and kind of developing its own thing. Netflix, the same thing. Netflix was working exclusively with the Trade Desk before. Now it wants to date other people, work a little bit with Amazon, see, if it can evaluate two suppliers rather than one for placing the right ads into the front end, the lower tier pricing. It's going to do that. It just this is an industry that's constantly changing, Heather. It's moving so quick. You got multiple players, and some companies go bankrupt or get consolidated and get acquired. And then you've got the Trade Desk that's kind of saying, hey, I want to change the entire industry. We're going to go out there and do OpenPath. And then you got Amazon that's coming out there and saying, hey, we're going to undercut pricing and do this even better. I mean, you've got to be comfortable in an industry like this that you never really know what's going to happen 3 years out. In fact, you probably don't even really know what's going to happen 1 year out. And that's kind of what happened with the Trade Desk in the last 12 months.
So things for investors to be watching is the new system of selling ads there. And any other things that people should be watching, positive or red flags?
I think that really this is an interesting one because it's we don't know what programmatic advertising is going to look like. We were all talking about supply path optimization a couple years ago, and then the new buzzword was connected TV, and then after that it was shopper buying behavior, and now it's Open AI and GPT and agentic. It's like every 2 years it feels like there's something new that's technology that's coming out there that's going to change advertising. You got $1 trillion industry here that's going to adopt all that stuff. And I think one of my favorite parts of the Trade Desk is Jeff Green is the best innovator in this space. When you see the things he wants to do, he sees it. He can connect the dots because he built a lot of this industry. He was one of the first people to do digital programmatic advertising on the demand side. So I think it's worth betting on the jockey on this one, that he's going to figure this out. But it's also challenging for him to get scale, being that you're kind of trying to disrupt the giants out there. The walled gardens are big platforms, and he kind of knows a more efficient way to do it, but it's really, really hard to get advertising clients on board. He's got some early adopters, but it's going to be kind of fun to see, the press releases and the conference calls and even the Q&A. It's always entertaining, to say the least, for anyone who follows this story, because he's doing some pretty neat things out there every single quarter.
Awesome. It's one I own and really would love to see come back. And I think you're right. I plan to keep on holding. We have another comment, not actually about the Trade Desk, about Rocket Lab. And so maybe we'll do a deep dive on that later this week.
We sure are. Thank you, Matthew, for actually suggesting this, because believe it or not, that was going to be Wednesday's show.
Perfect.
I think that was the perfect promotion, right?
Sorry to spoiler. Thank you, Matthew Zuckerman.
We've got to talk about Rocket Lab. This was something that we were pounding the table when it was $4 a share, Heather, and now it's $100 a share. We were at a 25 bagger plus for this one. That 7 Investing was jumping on really early, and we've got the metrics and what to look for as a long-term investor. And we're gonna do a refresh of the valuation. This is one that we actually went through all the paces and did a really, really detailed discounted cash flow. I think that's important for a stock like this, because you can't just go out and buy something like that at any cost. You can't just say, oh, it's $100, I'm going to load up, and that's $200, and I'm going to load up even more. I think we have to be mindful, because this is a business that does have constraints. It's physically making rockets. These are physical goods. It's not just the digital advertising world that's out there. But I want to take a look a little bit closer at the valuation. We're going to talk about Rocket Lab on a Wednesday show.
So Wednesday at 10 a.m. Eastern.
Yep. Thanks very much for everybody tuning in for this show on the Trade Desk. Matthew, I hope to see you on Wednesday as we're going to talk about Rocket Lab, a topic that seems like you might have a a shared interest in as well. That'll be our show again, kind of looking at one of the innovators of the space economy. I think that's going to be a really fun one as well. But in the meantime, I hope you guys have a wonderful Monday. We will see you again on Wednesday morning. Be safe out there. Take care. We'll see you guys on Wednesday.